Welcome back to Halftime Report. Narendra Taneja is an energy expert and he joins us now on the channel to talk further about the crude oil prices there. Mr. Taneja, hi, good to have you. And after that 5% decline that we saw overnight for crude prices, there is some bit of a relief buying happening right now. Would you state it to the Chinese data that came in better than expectations, or do you think the weak US dollar and some final opportunity buying is what really seems to be supporting?
Well, actually, there was kind of huge anxiety in global oil markets following the collapse of the Silicon Valley, bank. And, some of the people, they concluded that probably that would harm the American economy further. And the American demand for oil may, go down. That was, I think, not a very well-studied reaction because, yes, they thought it's 28 to 2008 is might happen again, but that's not the case. That's not really the case. But at the same time, when you look at Chinese data, I mean, demand is likely to go up, if not at 800,000, barrels per day, but at least by 5, China has opened up, tourists started coming there and all that. But overall, my sense is the landscape is reasonably okay, and I expect the crude oil prices to continue to be in the range of about $80 to $90 per barrel. You might see at times, oil dipping to maybe even $72, $73 per barrel, or may even go beyond 90. But the average over the next 3 months is going to be like, between 80 to $90, unless, of course, the situation over Ukraine goes completely out of control, which doesn't look likely, at least at this stage.
Sure. Mr. Taneja, also, what's your sense on the macros? Because the markets are now anticipating a 25 basis point rate hike from US, 25 to 50 perhaps from ECB as well.
Well, good question. You see, thanks to India, China, and Turkey, that they've been importing Russian oil, and that is the, oil at a very, I wouldn't say cheap oil, but oil at a rate that, for instance, American economy, the Western economies like India are comfortable with. So markets have maintained that range. It's in the region of about $80, $85 and all that. So the result is the biggest beneficiary of low oil prices has been the American economy. And that's why, probably the response of the Fed going to be slightly different because economy is done reasonably better. I mean, there were, of course, fears that American economy might slip into a deep recession, but that didn't happen thanks to low prices of crude oil. And who should they be thanking for low prices? India, China, and Turkey, mainly. Of course, other economies as well. So my sense is that probably will continue. America will keep talking about this thing. But America has seen it, Western economy have seen it, that low prices are actually helping them to tackle the deal with, recession and so. So I don't expect any deep recession. I think the economy will continue to recover. And the Fed has done what Fed has done, and they might continue to do that. But the biggest help that's being provided is by cheap oil, or oil at least at the rate of $80 per barrel. And for that, they should be thankful to India, China, Turkey, and among other importers.
All right. I'll wind up the conversation with one final question. And do you think the dependence on Chinese demand coming back is way too strong in all the forecasts that we see in crude prices?
Well, you see, China is, the second biggest consumer of oil after the United States. And all indications are that Chinese demand is going to go up. But I don't really think there's going to make any huge difference in terms of prices being pushed up further and all that, because the market is well adjusted. There's enough oil available. They were, of course, concerned the Russian oil might kind of disappear from the market. That has not happened. Sanctions may remain, but Russian oil will continue to flow because that's what America wants. That's what the Western economy wants for their own self-interest.
Absolutely. Mr. Taneja, as always, thank you so much for joining us and talking to us about crude oil, the opinion, analysis, and, of course, the price view. But with that, let's slip into a short break. We will get you more on markets and stock-specific action on the other side.